keep going. All right, sounds great. I'm going to talk a little bit about Crew and kind of my background. I've been a product manager for a long time. And then I'm going to talk a little bit about how I think startups can be successful and where that applies into big companies and some kind of hot takes there. So a little about me. I've got 3 cute kiddos. Live out in Draper, in Suncrest. We're outside every day riding bikes. Life is good. Very, very lucky person. Love my family. I'm going to talk about my background real quick here. So I started at Ancestry.com back in 2010. I was an intern there, and then they wanted to keep me on, and they were going to make me an associate engineer. And I was like, I don't know how to code, but I will try. And they're like, fine. If you can't code, you're a PM. So that's how I became a product manager. It's a very intentional choice. I then went to Instructure, worked on ed tech stuff. That was amazing. I got to work on kind of an Act 2 product called Bridge, which was like an extremely overbuilt LMS for companies. It was like the most beautiful thing you'd ever seen, and people didn't want to buy it, so that was really fun. And then I led the product management team at Divvy. Has anyone heard of Divvy? Okay, a few more people. Okay, great. So had a really cool experience there, worked with some really wonderful people. I was there from 2019 when we were at about 10 million in revenue to 2022 in November when we were about 400 million in revenue. So it was like a crazy growth tear, learned a lot of great things. That was my introduction to fintech. And then since then I've been moved on to Crew, and I'll talk about that in a second here. So I'm a big nerd. I'm a spreadsheet guy. I have a few of my favorites in here that I grabbed real fast. That's my budget with no y-axis. And then this is when I was deciding whether I could buy a Tesla. I spent way too long, and my wife was finally like, if you buy it, can you stop talking about it? And I was like, yes. So I bought a Tesla. This is me trying to understand my electrical bill one time. That was brutal. And then this is my magnum opus over here. This is me looking at the points to dollar value for the Chick-fil-A menu. Because I was kind of skimming through, and I was like, this doesn't make sense. And anyway, fries and cookies, that's what you want. Okay. All right, I'm going to talk about Crew. So why Crew? So main thing is, at Divvy, we heard all the time, I want this for my family. Just for anyone that doesn't know Divvy, Divvy was, think Expensify or Concur, but not bad, combined with your credit card, also not bad. So that's what Divvy was. So it was a free replacement for paid software, which is a great business model, right? We made money off of interchange. We had controls. It was software built for your company. And so you could say, I want to go to lunch. I need $50. Your boss approves it, and your corporate card all of a sudden has $50 on it. No expense reports. Maybe you snap a receipt if necessary. So people all the time were like, I want this for my family, which could mean a million different things, but we ran with it. For me personally, I just wish that my bank didn't suck. And so to tell a little bit of the story there, and I'm sorry, no one from Zions Bank is here today. I'm just kidding. It's a beautiful, wonderful organization. They've done a lot of good, but that's where I started out. I had a code green checking account with them back in like 1996 because my parents got a free lava lamp when I signed up. And so that's why I banked at Zions for 30 years, right? Did anyone else get a lava lamp from Zions Bank 30 years ago? Just me, okay. Then I went to, I was like, there has to be something better, right? In the year of our Lord, 2012, or whenever I started doing this, there has to be a modern banking experience that is not horrible, right? Like there's this fintech thing happening, and so I went and tried out SoFi, and I had a lot of issues. I'm not going to talk about those today because I think it's a great organization, but didn't work for my needs. I tried Wealthfront. Wealthfront was doing a cash account. I was really excited about that. I was like, maybe these guys are going to do it. And it definitely never felt like they were trying to be my bank. It was like kind of a banking sort of thing got snuck into a personal finance management thing. It never quite felt right. And then finally I gave up, and I went to Chase Private Client, and it's because I got free wires on the mobile app, and it is like a punishing experience, terrible. Like I've hated all of these products in various ways, and that's when I finally was like, okay, let me go fix this. So what would an ideal banking experience look like for well-to-do customers? There's some really great neobanks out there that'll give you your paycheck 2 days early, or will give you like a $200 overdraft. That's not what I'm looking for. I want to be able to send a wire transfer sometimes when I like buy a house or invest in a company or something like that. And so I'm looking for kind of an upmarket neobank, which weirdly did not exist. So what does a customer need who has a little bit of money? So number one, they need some trust. And this is an emotional thing that we will be working on the whole time with Crew is how do we get you to trust us? We're a new company, and there's danger there, and people are rightly skeptical. So we have FDIC insurance, that helps. A premium brand helps. No fees helps. But there's just a lot to do there. We need fair economics. A lot of these neobanks, they don't pay any interest, or they pay very little interest. So we're going to pay a really good savings rate, really good checking rate, and we'll kind of track the Fed rate as it goes up and down. We need liquidity, high limits, wire transfers, all that kind of stuff. And then for me, this is a killer. Most neobanks don't allow you to have a joint bank account. So if you're married and you want to bank together with your spouse, like 90% of people do, you can't do that with most neobanks. So I needed that, and then I also wanted to set up accounts for my kids. And this is where we kind of got the idea is, man, there are companies out there like Greenlight and others that millions of families are paying $10 a month to distribute a $15 allowance to their kids, which is insane, right? Like, if you think interchange is bad, like a 2% cut, like, it's real bad. Anyway, so we came up with this idea of family banking with Sparkles, right? So we're going to try to create a new market called family banking. And we want to figure out how to make this feel like a family office, which is like a money manager for wealthy families, and they have really nice marble floors and stuff, and it feels very premium. Not a family restaurant, which is like sticky floors, sticky menus, and it's really just a kid's restaurant, right? So how do we make a family bank feel like a family office and not a family restaurant? And so I'm going to drill in a little bit on our onboarding experience today, and I hope there's something useful in here. I don't know yet what it'll be, to be honest, but I'm just going to show you a whole bunch of stuff and kind of some of the insights that we had along the way, and then I'm going to yell at you guys about speed for a bit and try to connect the two together. Okay, so our goal with our sign-up process was, how do we get good people to sign up as easily as possible, teach them what Crew is, and keep the bad guys out? Turns out your first customers in a fintech are always the bad guys, so that's fun. So we watched our first, it felt like 50, I think it was 30 people sign up for Crew. We actually had them come to our office, or we went to them, and we recorded them, turned it off when they're putting in their social and stuff, and just talked them through. And these were friendlies. These are like investors, friends, family, cousins, former coworkers, a couple people that are here today, and we just did tons of iterations. So that was our approach, and I'm going to call these just 3 rounds real fast. In reality, we were making changes after every single interview, and I'm just kind of grouping them together so I don't do 50 rounds. So here was our first sign-up flow. This is kind of the whole thing. There's 1 or 2 things I cut out, but not much. So it's like, here's who we are. We're for turtles. You had to log in, give your name, birth date, address, and then we asked for your social. You submitted the application, and that was it. That is literally the whole process. Most of the time, you have to go down to a branch. Like Wells Fargo will harass you for days of oh yeah, Bob's not here. We just want to make it really easy to get in. Once you've been approved, downloaded the mobile app, you sign into the mobile app, set up your account there, and that's where you're going to set up your partner and your kids and that sort of thing. So here's how you add your partner. Just need your name, birth date, phone number, email, so that we can invite them and you don't get the wrong person into your bank account. Add your kids, summarize, here's what you got, fund your account, boom, you're in. So that is the whole onboarding flow that we launched back in January. We felt pretty good about it. We felt like people could zoom through it. We were a little bit embarrassed, because that's the right time to launch, is when you're still a little bit embarrassed. And then we watched these 30 people sign up. Okay, so here's what we heard from people. Now what? So they landed in their bank account, and we were like, sorry, all of the functionality that we had built, you've already done, which is adding your family, and now we got to wait for your money to arrive. So sorry, we actually literally don't have anything else for you to do. So they kind of felt like they're running off a cliff. Second thing is what is Crew exactly? And that one hurt. I was like, you don't read my LinkedIn posts, it's fine. And then the third thing we heard is did I just sign up for a bank account? They literally didn't know what they had just done, which is problematic for a variety of reasons and doesn't bode well for engagement and legal stuff. Anyway, we didn't say it all technically, but people didn't understand, so that's not good. Okay, so our conclusions were, number 1, it was just literally too fast, which is an amazing problem for signing up a bank account. Is that was too easy, but it's still a problem. We kind of overcorrected. At Divvy, it's very complicated. We had to vet the company, the signer, all the beneficial owners, and it was just a lot of stuff. And so we were constantly trying to make it quicker. And people already knew what Divvy was when they were coming through the sign-up flow. And with Crew, they have no idea who we are, and it was much simpler. And so we realized we had kind of blown it in that way. We needed more orientation, more education, more kind of reiteration of who we are. And it turns out people will end up in this flow not knowing who we are. And then, people weren't sure if their transfer worked, so that was kind of a bummer, because they ended up on this big screen that just said $0, so whoops. And this wizard, we kind of had training wheels on through the whole onboarding process, and we realized That was kind of a lot all up front, and they felt like they hadn't seen the product even though they had done everything that they could do at the time. So we decided let's break up that wizard in multiple steps. And then also, it needed more zhuzh, you know? That's the correct way to spell zhuzh if you've ever wondered. And I had some fun looking up the etymology of that word. That's kind of a fun one for later if you want to look it up. Okay, so round 2, zhuzh it up. So I'm not going to show the whole thing again, but I'll show some of the zhuzh that we added. So we have our friend the pig here. I don't know, money, something, right? He's cute. We had a little firework we added when you applied. So as we were processing, there was like a fuse that was kind of like a little GIF going, and then it exploded if you got approved. We didn't do anything if you don't get approved, because that was awkward, like it falling over. We had ideas, but... And then when you finish your transfer, we had a cute little thing of like, you're moving, you know, your money's in your bags, like, I don't know. So we added some fun illustrations there. It turns out one of the people on our team was a great illustrator, so that was convenient. We also did some of these like little progressive kind of very simple, just tell you who we are. So you're gonna get a good savings rate, it's FDIC insured, it's a bank account, like we've said that many times throughout, tried to make it really obvious. Deeper in the process, we did this again of like, it's for everybody in your family, and it's got like these different accounts, and you can do allowances, and trying to just reiterate what we are along the way and not slow people down too much. Some other things that we did on our home screen here, so we have like, the money hasn't arrived yet. We haven't actually done anything with it. If you try to move money in, we have to wait for the ACH window to pick up, blah, blah, blah. A bunch of fintech stuff. But the point is, like, we heard you. We're going to go try to get the money moved in. And so we wanted to show that in this prompt. So that's something we did in that first screen there. The next thing we found is that, like, people really enjoyed adding pictures of their kids along the way. And so we figure, like, there's not a rush. Like, let's let them do that real quick. Let's put their cute kids in there. Got your ducks in a row, add some puns. And then we also added some prompts in the product of like, okay, you're on the home screen, now here's what you could do next, and here's some little nudges in the right direction. Now, again, we added these things daily, and we kept going through, so it wasn't like we did a big batch. But some of the takeaways that we had kind of at that stage was, it was awkward that I logged in on the web and got this all set up, and then I downloaded the app, and then I had to log in again. And it's like, why did you make me log in the web? And our original thought was, well, it's a big commitment to download an app. And it turns out, no, it's not. People just download the app. So if they want to do it, they're going to download the app. Don't make them log in twice. And so that's been a nice change. Another thing we tried to get cute on, you probably didn't notice this because I zoomed through it, but instead of asking you if you have a preferred name, we just said, do you go by a different name? We're like, preferred name, what does that mean? And we thought we were being really smart, and no one understood what that meant, because no one's reading, and you're just looking for heuristics on like, make this exactly what it's called before. And so the takeaway there is, don't get cute. The last thing is, banking is the low point, which we kind of knew was going to be the case, but it is a pain in the butt to connect your bank account with other accounts. Like, open banking is terrible. If you have a terrible bank you're moving from, definitionally, it will be hard to connect to that bank through Plaid. That's why you're leaving them. And so that's been a hard point, and we made people go through that before they got into the product. So I'm not going to show you another round, guys. Sorry, those are all the pretty pictures. But we kind of moved everything to the native app, and then what's next that we're working on is delaying bank linking. So we're going to make it so that you don't have to do that. You can get in, you can see what the product looks like, kind of get a feel for it, have a good experience before we throw you to the wolves one last time. Let you schedule transfers to your kids. So you've moved money in, but it hasn't actually arrived yet, but we can schedule transfers to your kids and kind of keep the momentum going, give you more to do, add some social proof, show some people along the way, all the things that you hear from marketers. And then we're also going to help them move their direct deposit over and all your bills and that sort of thing. So we have a lot to do to keep making this better, but it's been a really good experience so far. Okay, I'm going to now change gears to just some kind of insights from this, and then also just hot takes generally. I have like a unique experience here where I spent 14 years as a product manager in like growth stage companies, and then as a leader in the product orgs, and then now I'm the CEO. And I've been saying for years that products are the CEO of the product, and now I get to actually be the CEO and do some comparison. That's been very interesting. So first hot take here, it's not that hot, but everybody's lying, okay? So when you ask people what they're going to do or how they'd feel or all that kind of stuff, like 95% haircut, in my opinion, which is why I'm very skeptical of most of the research tools that we use. So surveys, that kind of stuff, like people say they'll do one thing and then you launch it and then they don't do it. Very frustrating, right? So all that really matters is what customers do. Another side tangent here, Jared Spool has a really great takedown of NPS, but a really great example of how, like, I know this is true, is NPS is asking you how likely you are to recommend. Why don't we just look at if they've recommended, right? Like the organizations that like worship this metric, they seem to not pay a lot of attention to actual referrals, which I think is just like tremendously interesting. Okay, you should use the right tool for the job and stop moralizing. So I hear this all the time when I was working with really closely with a lot of different designers of like, I feel like if I don't do this, that I'm doing a bad job. Like, I'm not going to feel like a good PM if I don't use this tool that I have in my tool belt, or I'm not going to be a good designer if I don't go through these steps. And what I hear there is like, you're kind of moralizing this a little bit. You don't necessarily believe that doing that thing will make the result better. That's the reason to do it. Not because you're not going to feel like you're a real, grown-up PM or designer if you don't do it. So just figure out what the right tool for the job is and use it. Don't moralize. A/B testing, we talk about a whole bunch, but if you're in a growth stage or like an early stage company, you don't have tons of volume, it probably doesn't make a lot of sense. We overuse the term research. So one of the speakers here is like an actual doctorate in research. They can use research all they want. Most of the times I hear people talking about research is when a junior employee is trying to shut down a conversation. Does that resonate with anybody? Of like, hey, we should do this. And they go like, well, my research shows. And I was like, no, you don't have research. So I think we've been taught to think that research is like double-blind, verifiable, publishable, like you can pretty much trust it. Now, it turns out most published research is faked as well, right? Like we're finding like it's not replicable. But when you talk to 10 people or 2 or 3 people or look at some insights and then say, my research, I just think you should be rightly skeptical of people when they use the term, because we use it to shut down conversations sometimes. I think it's great to go talk to some people and say, this is what I think we should do. And then the last one that I want to spend a little bit more time on is that speed is the only durable competitive advantage that we have in tech. So I worked at Ancestry.com, and that's an exception where they worked more like an oil company. They had exclusive rights to a bunch of records where like a county was legally required to make certain things available to all of their population. And Ancestry came in and said, we will give you a digitized version of this and host it for you, and you sign this agreement that you can never let anyone else digitize it. And so they just went and gobbled up 10 billion records, genius business, but it functioned more like an oil exploration company than a tech company. I think that's very rare. Most of you, your companies, if someone comes along and wants it more than you and moves faster than you, they'll beat you. The end, right? So that means speed is the only durable competitive advantage that you need to work on. I want to talk about another concept here. It's kind of fun. I've had these conversations, especially when you have like a large mature product, a large mature team, and you're rotating through positions. And I remember going to my designers sometimes and saying like, hey, like we're going to do this thing, but can we do it really quick because I have like 50 other things that are stressing me out? And these wonderful designers who are very good and very proud of their work would have this feeling I call there be dragons, which is like they have a mental map of the product, and there's the part they've seen, the part they've designed, the part they're planning to fix, and then there's there be dragons, which is like the other stuff that someone else did that I'm not responsible for. And they would never say it like that. They don't feel that, but they have a high standard that they expect of their own work and of their product, and they know there's stuff out there that doesn't fit it. And I have a visual that I finally made in my favorite design tool in Sheets, right? And so this is kind of a way to visualize quality and different ways to think about it. So across the top here with all this red, imagine your product has like 50 things they're supposed to do. And there's some where like you have to reach out to support to do it. That's the red stuff where it's like it doesn't even try, right? Or it's really, really bad. And then there's some stuff that you've spent a ton of time on, you've spent months and months getting it right, and you have like a world-class differentiated product experience here. Those are like the green little peaks at the top. So when we say we want to make a higher quality product, what most people hear is the second row, which is like on our next stuff, like let's do whatever we do, let's do it really good. Let's have like an incredible world-class experience for each thing that we build. And what that often means is we're spending a lot more time on it. And that can be the right thing to do, but it doesn't necessarily mean it's the right thing to do. This third section I've found is more often the right strategy, which is take a complete view of the whole product, including the there be dragon stuff that you don't acknowledge is out there, and think like, with the next X amount of time that we're talking about, how can we improve this experience for the most people? And it might mean that you're shoring up some gaps, you're building some quick things along the way, and then you're going deeper in maybe 1 or 2 areas. I think it'll often mean that you're not going all the way in a few places. And I find that if you don't have this visual representation of your product experience and where you are today, it's easy for there to be kind of like a mismatch and unnecessary friction, especially between like PMs and designers. All right, so one other little gut check. If someone on your team came to you and said, hey, can we go faster? Raise your hand if you feel like a visceral, like, I want to fight this person a little bit. Okay, raise your hand if you're like, oh yeah, like let's do that. Okay, I'm guessing the designers raise their hands first, mostly, and then the PMs raise their hand the next time. I think that's an interesting thing, okay? A little gut check, and that is the tension that I have experienced a lot in my career. So I want to tell you guys a quick story. I have no qualms telling you I'm very much on the side of speed and quality are coherent. It's the false dichotomy, and I want to talk about why that is. So let's pretend you take 3 months on a big project. Because you took 3 months, you get more cautious. Hey, we really better do our diligence. Like, we're going to go under for a while for this next project. Like, what if we're wrong? Let's do more testing. Let's do more, research up front. Let's do more to try to make sure that we don't aim wrong because it takes 3 months to shoot, right? Then your projects get bigger. Like, all right, well, we've been stuck on this other thing for so long. So for this new thing, we're going to be in this area. Let's fix all these other things too, because who knows when we're coming back to it? The projects get bigger and bigger and bigger. And your team starts to feel like you have a V2 problem. I've heard this from many, many designers in particular, where you never come back after you first launch something. Anyone feel like your company has a V2 problem? Does that resonate? Okay. I believe your V2 problem comes from going too slow. That's why you have a V2 problem. And it's intuitive when you think about that, of like, you can only do so many things if all of your projects are 2 months long. You're always going to have a V2 problem, right? Because there's always more to do than you can do. So with the slowness story, the projects get bigger and bigger. They get slower and slower. It becomes a self-fulfilling prophecy. You feel justified in thinking you're never going to come back because you aren't, and it gets worse and worse and worse. That's the poop emoji. Okay, so I'm going to talk about one of the most infamous hustle bros on the internet, and I apologize for that. I can't endorse everything he said in Amp It Up, but it's mostly awesome. I'm going to show you a big block of text, and I apologize for that. It's breathtaking how slow, substandard, and unfocused many companies out there get through the day. And think nothing of it. The lack of energy is palatable. There's performance upside everywhere. As a leader, your opportunity is to reset in each of these dimensions. You do it in every conversation, meeting, and encounter. You look for and exploit every single opportunity to step up the pace, expect a higher quality outcome, and narrow the plane of attack. Then you relentlessly follow up and prosecute at every turn. Yes, it's confrontational. That's pretty much what CEOs do all the time. Confront people, issues, and situations. Okay, so there's this life. I'm going to go on a quick tangent here. There's this life cycle in tech where company raises lots of money, they start growing, they hire a lot of really smart people, and it is a fun place to work. They cover all your insurance. You've got like ping pong tables, and you're talking a lot about high-class problems, right? Things are going really well, life is good. Then a private equity company comes, buys the company, fires a lot of the people, get rid of the ping pong tables, stop paying for your insurance, outsource a lot of it to India. That sucks, right? And you can be at different stages of that journey and do great work, and I've been through all of it. What's happening in a broad sense, I think, is that a private equity company that has lots of money comes in and says, you're not doing this. You're not moving fast. And there's performance upside everywhere. We can come in, fire a bunch of people, and the business will continue to work. And they're usually right. And the way that you solve that is by maintaining that urgency even when you have to kind of manufacture it a little bit. Because the only way to do great work and to continue to build a great product is to act like you're running out of time, to act like you don't have a lot of time to work on things, and to move very, very quickly. All right, by contrast, happier story here. Project goes really quickly. Your team feels the momentum. Everyone works to simplify their projects so you can go faster and solve more problems. You take on work in small bite-sized chunks to make sure you're not locking up the team for a lot of time. Projects get smaller, simpler, more focused, and because of that, you go faster and faster. So this also becomes a self-feeding thing. So the question is, which vortex do you want to be in? Do you want to be in the slower and slower vortex or the faster and faster vortex? I know it's scary, and I'm still making some of you feel nervous, but I promise you it's a lot more fun, and you're less likely to get fired and replaced by a bunch of people overseas. And I'm joking about this a little bit, but it's true that I work with some very curmudgeon-y people. I remember some engineers I worked with at Ansys were wonderful people, but very curmudgeon. They'd say, you can have it fast or you can have it good, right? And I think that's a false dichotomy, and it's a perfect recipe for, if we're saying the work is fundamentally fixed, then yeah, you should outsource it. If you believe that the work is creative, that you can find a better, simpler way to do something, then you deserve to solve that problem. We should keep that here, and we should go solve it on a team that's working closely together. All right, and then, Sam Altman yelling, faster, 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 which I agree with this. And then 5 ideas specifically to go faster. So 1, be on the lookout for places that you can move faster and why things are slowing down. Start with a budget. I think it's really critical to say, how much time is this problem worth? And now let's go find a solution that fits that budget. If you don't do that, then it's easy for the designer and the PM to be misaligned, and the designers say, I'll show what this should ideally look like, and it ends up being really complicated and big, versus if you can work with a budget up front, we can come up with creative solutions that fit that budget. Monitor these 3 vectors of speed. Is the pace uncomfortable? Good. Do you have a high quality expectation? Are you embarrassed when a customer complains and you reach out to them quickly and fix it that day? Great. And then are you focused on a narrow field of attack? Like, are you spreading yourself too thin, or are you focused on just what matters the most? Ask yourself, why not today? This is my favorite question that I would use once I had some credibility with my team. So I would say, amazing. What would need to be true to ship this tomorrow? And everyone gets uncomfortable and they squirm, and then you kind of uncover what the complexity is, and you maybe come up with some interesting ideas for how you could say, all right, well, let's remove all that stuff that I actually didn't want you to do, and let's see if we can get something live in the next couple of days. And I find that's a very, very helpful conversation. And then finally, I think dreaming up an enemy can be really powerful. Some of the best companies I've worked at were the ones where we're taking down Blackboard or whoever. And I think even if that's not real, there's something, we're all a little bit competitive, and I think it's helpful to feel some urgency there. That enemy might just be your cash zero date if you're a startup running out of money, and then it might be a big company that you're trying to take down otherwise. Okay, that's what I got. Thanks so much, everybody.
Gentry, thank you so much for your words of wisdom. Many people here, you have a unique opportunity in that you are a career product manager.
Yeah.
Turned now founder. And I actually had Lauren Treasure. If you know Lauren, she, I think, was at Ancestry as well, turned founder of Piga. I asked her this question a few weeks back on a webinar I had with her. What would you say, what advice would you give yourself as now that product manager sitting in that audience right now, and you're working with a founder, startup founder? I'm sure many of you are working with startup founders right now, whether your company's 10 people or 500 people or 1,000. What do you want them to know about that you now feel as the founder?
I think what I've always told people who want to get into products is the same thing I tell you if you want to just be better at products. I can't speak on the design side, but I think some of it translates, which is just act like you own the business. So what I tell people is pretend you've secretly put together a leveraged buyout and you can't announce it yet, but the business is yours. And don't be a jerk, but care deeply about how this thing works all the way through. And so, I think doing a little tour where you go chat with the CFO, ask them what's keeping them up at night, chat with the CEO, hey, what's your top 3 stressors? It's very easy to insulate yourself from the realities of the business, but they always catch up with you. The business has to work, or else we're all going to be doing something else. And so I think the sooner you can align yourself to what are the people who have the most information about this business stressed about, I think the easier it is for you to find your place in it and actually add a ton of value.
So you go and you talk to the CEO, you talk to the founder, talk to others that know a lot about the business.
Yeah.
Okay. Particularly within the financial industry, it is really slow. There is a lot of regulation within fintech and finance and banking. How do you deal with that? What barriers have you encountered, and how have you gotten around them?
Great question. I would say there's some dumb regs here for sure. I think in general, though, as an industry, fintech needs to pay more attention to them, not less. We went through, we were doing $1 billion a month in credit card spend at Divvy. So we saw every flavor of fraud and problem that you can imagine there. And I think all of the fallout that we're seeing right now with Synapse, the bankruptcy, and all this stuff in fintech, a lot of it is due to these people not being serious people. And so I think dealing with the regs is a challenge. It's expensive. It slows things down. And we picked fintech because we wanted to make a difference here for families, not because we thought it was the easiest way to make money. Otherwise, we do B2B SaaS for sure.
So what are you doing to get around those? Like, are you just trying to break through them? Are you trying to be creative in how you get around them? Maybe is there a story you can tell us?
Yeah, we're not pushing the envelope on the regs. So like where you hear a lot of people that are like frustrated with the regs, they're often doing like lending to underrepresented groups, and there are issues there. And a lot of these guys are taking advantage of customers not even really realizing that. We're building a banking product. It's like right down the middle. Like we'd like to pay people interest. We'd like them to be able to sign up with their spouse as a joint owner and add their kids as authorized users. So there's not a lot of regs that are like really, messing things up for us. It's more of like to get into market, we couldn't take deposits from people because we're not a bank. We have to go work out a bank partnership, an FDIC insured institution that can hold the money. So that's really how we got through the regs, is by partnering with a well-run bank.
Yeah. You don't have lobbyists in Washington yet right now.
Not ourselves. Not yet.
Okay, someday.
Yeah, someday we'll get there. Yeah.
You talked a lot about this speed. Oh, there was a great question up here. How do you avoid leadership focusing on speed at the expense of the mental well-being of your employees? You're in a different seat as an owner.
Yeah,
You're reporting to the board, but you also have an ownership in Crew.
Yeah.
Maybe some of the PMs, the developers you're working with, they're early. They get some ownership there as well. But how do you really balance this well-being of you're pushing in a really direction? You have a lot online. So does your backers. So how are you balancing this well-being?
Great question. I think when I think about speed, in general, I'm not thinking type faster, which is I think what people hear, especially engineers. If you're like, hey, we need to go faster, they're like, I'm typing as fast as I can, man. Like that's not the issue. I think, but I think it's easy to interpret it that way if there's external pressure telling you to go faster. So what I think is like look for what's slowing you down. And what's slowing you down might be just like indecision. It might be kind of litigating things that you've already made decisions on over and over again. Like I think a lot of this is emotional. And so the solution a lot of times comes from saying like, yeah, we want to, like, I would say accept the desire for speed as being good, because the reason they want that is so that they don't have to fire everybody, right? They don't run out of money. That's why they feel the urgency. And so if you accept that as correct and true, then you kind of flip it and say, okay, cool. What needs to be true for us to go faster? Are there things they're doing that are slowing you down? Like, are they changing their minds constantly without new information? Like, let's set some norms that say, here's how we're going to operate. Here's how we're going to make decisions. And in the interest of moving very quickly and not relitigating things, we're going to not reevaluate questions unless we have new information that's material. It's probably very situation specific, but like in general, I think the mental well-being problem comes when there's a disconnect, where it's like, I feel like I want to do it well, and they want me to do it fast, and I don't think it's possible to do both. And I think that's often false. And it often means you have like a different set of metrics that you're evaluating versus what the CEO does, and you need to just get on the same page.
Yeah. How can employees all feel like they can be on the same pace when they face different challenges, which may take different amounts of time?
I think transparency goes a long way, like sharing what you're doing, sharing where you're stuck, and then like speaking for myself, I recognize like I want this to be a 10-year minimum experience for the team. Like, people will move on if they need to move on, but if we're doing great work, like I want to continue doing it. And so this is a marathon, not a sprint. But it's a marathon that like we have to sprint through to survive. And so I think being on the same page about what you're signing up for is important. I think like you're just gonna have a different level of intensity based on the kind of company that you join. If you're in a startup, it's an existential thing. If you're at a bigger, more established company, there's some inherent stability there. And so I think you have to like have alignment there as well. But I think sharing what's going on, sharing your time, sharing like where you're spending a bunch of time, where you're getting fouled up, I think makes it easier for your team to pitch in and kind of rebalance.
All right. Last question here. What is your advice with working with CSMs, implementation support, and others internal services teams as you focus on delivering faster and faster? In my experience, they get very hesitant because they have to give our customers a big enough heads up. I'm assuming this is very much an enterprise B2B company.
Yeah, we don't have a lot of CSMs yet, but I love that problem. Make those guys squirm. That's the job, right? Like, oh no, our product is getting better too fast. Brilliant. Like, that sounds amazing. We've had this problem, and like, that's how I know things are going well. Like at Divvy, at Instructure, that was a concern where they're like, I feel like every time I'm talking to customers that like we're moving things significantly on them. I'm like, yes, absolutely. Like, it's the only way we're gonna win is if we like continue to move really, really quickly. You can make things smoother. You can, roll things out as you need to. Like, have some tooling around, feature flagging. Don't do dumb stuff. Like, there's easy things you can do. Like, try to not have unforced errors there. But if it's purely just like your velocity makes our customers uncomfortable, like, amazing. Great, not a problem.
How are you going to get everyone here a better interest rate when they sign up for Crew?
You sign up and you get it. So yeah, 4.7% APY with savings, and then if you invite somebody sign up with my code with Gentry, and it'll bump you to 5.2% for 3 months.
There you go. Sign up with Gentry, 5.2% for 3 months. You said
for 3 months. Yeah, we'll bump it by 0.5% for 3 months.
Okay.
Assuming the Fed doesn't come mess things up, it's 5.2.
All right, Gentry, thank you so much. Everyone give Gentry a round of applause.